Hey everyone, welcome back to the channel where we break down what's moving markets and your money. Today, we're diving into the first 100 days of Donald Trump's new term, which kicked off on January 20th, 2025. It's been a whirlwind of bold moves, from sky-high tariffs to crypto-friendly policies, and they're already shaking up the economy, global trade, and your wallet. So, what's been done? What's working, and what's got investors on edge? Let's unpack the promises versus the reality, and I'll throw in some fresh insights to help you understand what this means for your finances. Grab a coffee, and let's get started. First up, the big one. Trump's trade war, version 2.0. He's been hammering on the U.S. trade deficit, which hit $900 billion in 2024. That's 3.1% of GDP. Trump says this is killing American jobs, especially in manufacturing, and points the finger at China, but also at Mexico, Canada, and the EU. His fix? Tariffs, and lots of them. We're talking over 100% on Chinese goods, like electronics, and textiles, 50% on imports from Mexico and Canada, and 25% on European cars and farm products. Some of these got dialed back a bit after markets freaked out, but the average U.S. tariff rate has still spiked to 23%, a level we haven't seen in over a century. So, what's the impact? Trade with China has tanked, imports are down 65%, and supply chains are scrambling. This has brought back about 150,000 manufacturing jobs, which sounds great, but there's a catch. Retail and logistics lost 80,000 jobs because higher costs are squeezing businesses. Plus, inflation's creeping up, 4.2% so far this year, hitting everything from groceries to electronics. The government's raking in $120 billion from tariffs, but consumers are feeling the pinch. For investors, this is a mixed bag. Domestic manufacturers like steel and auto parts companies are seeing a boost, but retailers and tech firms reliant on global supply chains are taking a hit. My take: keep an eye on companies with strong USC-based production, but brace for volatility as trade talks drag on. Now, let's talk foreign policy, because it's not just about trade. Trump's shaking things up on the global stage, and it's got markets nervous. In Ukraine, Russia's still got the upper hand, controlling 20% of the country. Trump's skeptical about the $200 billion the U.S. has poured in since 2022, so he's slashed military aid to $500 million a month and pushed for peace talks. A ceasefire in March fell apart fast, and now it looks like any deal might favor Moscow, which could leave Ukraine and Eastern Europe vulnerable. This is spooking European markets. Defense stocks are up, but broader indices like the DAX are shaky. In the Middle East, it's a roller coaster. A ceasefire between Israel and Hamas collapsed after just 10 days, and U.S. airstrikes on Houthi targets in Yemen are raising fears of a bigger regional conflict. On the flip side, there's hope for a new nuclear deal with Iran, which could ease oil prices if sanctions are lifted. Speaking of oil, Trump's also cozying up to allies in the Indo-Pacific, like India and Japan, to counter China. More military drills in the South China Sea are flexing U.S. muscle, but China's hitting back with sanctions on American firms. For your portfolio, energy and defense stocks could see gains, but companies exposed to China, like Apple or Tesla, are at risk. Next, let's zoom in on the budget. Trump inherited a $1.8 trillion deficit, 6.4% of GDP, and his Treasury Secretary, Scott Bessent, wants to cut it to 3% by 2028. The plan? Use tariff revenue, projected at $700 billion a year, and slash spending. Elon Musk's running the Department of Government Optimization, or DOGE, and they've already axed a few small agencies, like the National Endowment for the Arts, and cut 15% from departments like education and energy. They'd also pushing privatization. Think parts of the Postal Service or Amtrak, and corporate tax cuts from 21% to 15% to juice up growth. But here's the reality check. Doge is only saving $100 billion a year, way below the $500 billion goal. GDP growth forecasts for 2025 got trimmed to 2.1% from 2.5%, and the Fed's hiking rates to 5.2% to tame inflation. The national debt's holding steady at 125% of GDP, but it's not shrinking. For investors, lower corporate taxes could lift profits for big firms, but higher interest rates are bad news for bonds and growth stocks. If you're in real estate or tech, tread carefully. Immigration's another hot topic. Trump's doubled down on border security, sending 10,000 troops to the southern border and investing $2 billion in drones and barriers. He's also fast-tracking deportations, 120,000 people so far, with El Salvador agreeing to take in up to 50,000 a year. Programs like DACA are on ice, and H-1B visas for skilled workers are under review. This has cut illegal border crossings by 40%, but it's straining industries like construction and agriculture, which are short $10 billion due to labor shortages. If you're invested in these sectors, expect some turbulence. Plus, Mexico's threatening trade retaliation, which could hit U.S. exporters. Now, let's talk crypto, because Trump's making waves here. He wants the U.S. to be the crypto capital of the world, and he's walking the talk. A national Bitcoin reserve is up and running with 10,000 Bitcoins, worth about $800 million. A crypto czar is steering policy, and the SEC's dropped lawsuits against major exchanges like Coinbase. Bitcoins jumped 25% to $80,000, and the crypto market's up 15%. Blockchain startups are seeing a 30% surge in funding, but analysts are warning of a potential bubble. If you're into crypto, this is a green light, but don't go all in. Volatility's still a thing. Energy's another big focus. Trump's pushing hard for oil and gas to lower fuel prices and boost energy independence. He's greenlit 20 new drilling projects, including in Alaska, and pulled the U.S. out of the Paris Agreement. Again, EPA emissions rules are gone, and subsidies for solar and wind got cut by 50%, redirected to coal and gas. Gasoline's down to $3.10 a gallon from $3.50, and oil production's up 5%. But emissions are set to rise 8% by 2030, and green energy's taken a hit. 50,000 jobs lost, though 30,000 new ones popped up in fossil fuels. Energy stocks like Exxon are rallying, but renewable ETFs are struggling. If you're betting on green tech, it might be a tough few years. On health and education, things are messy. Trump tried to gut parts of Obamacare, but Congress pushed back. He did manage to cut subsidies by 20%, and drug prices for 50 generics dropped 15% after pharma talks. In education, the budget's down $10 billion with a pivot to charter schools. There's also a controversial ban on diversity and inclusion programs in public schools, sparking protests. Healthcare and education stocks are flat for now, but keep an eye on policy shifts. So, what's the big picture? Trump's first 100 days show a guy moving fast to keep his promises. Tariffs, border security, crypto, and oil are all in high gear. But the results are a mixed bag. You've got job gains in some areas, cheaper gas, and a crypto boom. But inflation's up, trade tensions are brewing, and budget cuts aren't delivering as hoped. For your money, this means opportunity in energy, defense, and domestic manufacturing, but risks in tech, retail, and anything tied to global trade. My advice? Stay diversified, watch inflation data, and keep an eye on Fed moves. That's it for today's deep dive. If you found this helpful, smash that like button, subscribe, and ring the bell for more finance breakdowns. Drop a comment. What do you think of Trump's moves, and how are you playing this market? Thanks for watching, and I'll catch you in the next one.